Let's pick up on the sell-off of some of the tech stocks and especially the software stocks. Let's go to Mike O'Rourke. He's Chief Market Strategist at JonesTrading. He joins us to talk about this. Mike, thanks for your time.
Thank you.
The tool that Anthropic has developed that helps with legal contracts, is the disruptor to the market, is it the disruptor the market seems to think it is?
I'm not sure the tool the disruptor the market thinks it is. I think it's more about the market seeing the risk and the potential there. We've heard about AI agents for the past, whether it's month or two. I think we had the Microsoft earnings last week where their cloud growth, their Azure growth was a little less than expected for the amount of CapEx they spend, but also they invested in their AI agents. So you see this narrative starting to play out, and you're starting to see it take shape. And then, of course, you have this AI, AI agent add-in that Anthropic announced. And when you see something like Thomson Reuters, which is obviously a big media, financial services, and they own Westlaw, you saw that the shares of that stock sell off. And people could easily make the connections to other financial services companies that, are involved in data and analytics and whatnot. And the other aspect of this that is important, especially with the greater software space and the cloud spaces, these groups, these stocks tend to have very predictable annual recurring revenues that make them very attractive for investors because they like the predictability. They're willing to pay premium multiples for that type of business, and they also tend to have good profit margins. So that, those premium valuations are starting to come out of all these stocks right now. And I think that's what we're seeing pricing into the market.
Okay. Companies that have their own protected data archive, you mentioned Thomson Reuters, are they at risk if that information is not available to AI? I mean, they have protected information.
Well, no, and again, I would agree with you that if you have proprietary information, that is your edge. I think it's more about, I don't think anyone is under direct threat at this moment in time, but it's more about the market saying, oh, things can change in the future. And, we've for the past couple of years, we've talked about AI changing the world, and we're going to look at things drastically differently. And now you're seeing these little seeds being planted of things that may emerge that do things differently. And it's almost as if, you're sitting there going, that new competitor, due to, the coding that AI can do quickly and effectively, might be more nimble and quicker to market with a newer, better product than a large legacy institution. Of course, large legacy institutions should innovate themselves and try to compete. But I think that's why we're seeing it's more about premium valuations coming out of these names.
Okay. I've heard some say, obviously, some of the software companies are more at risk or more vulnerable than others. Do you agree? And if so, where does that split occur?
Well, I think your previous guest, Mr. Green, had some good points there. Some smaller spaces, you might be more vulnerable. I think that's, there's definitely, I don't want to put a target on anyone's back at this point in time, because we're so early in this right now. And again, we don't know what the agents are going to look like. We don't know how things are going to, play out. And we don't know how these larger companies are going to respond. But what we're seeing here is that there's more risk in this space than obviously investors have thought there has been for the past 5 to 10 years, where these valuations have grown.
Okay, so with tech down, with software companies down, I'm wondering if you think there's more of a stabilization ahead, and if so, what does that look like?
I think the market's revaluing these groups. They need a higher risk premium at this point to acknowledge there's some degree of risk out here to certain people's business models. So I think we're seeing that unfold here. I do think we hit a bubble mentality. I'm a believer that we hit an equity market bubble, at least here in the United States last year. So I think part of it is that coming out of it. Obviously, you see that, the two places where this trade has played out in recent weeks is the semiconductor space going up, especially led by memory chips where there's strong fundamental demand and there's a supply shortage, and software stocks going down. And while those memory stocks are still remains relatively strong, you're seeing AMD come off today. You're seeing NVIDIA come off this week. So these other names that have been leaders in the semiconductor space are starting to see weakness. And again, investors, there's just more doubt coming into investors' minds that things are going to play out as quickly and be as strong, especially for everybody, as we've talked about the past 2 years.
Okay, so would you tell investors to sort of be picky about the tech that they're choosing to invest in, or would you sort of pull back from the traditional Mag 7 and go into other parts of the supply chain? How would you advise investors?
So I would say investors should always be very picky and very selective with anything they're investing in. Now, from that point, I call the top 20 market capitalization stocks in the S&P 500 the 20 titans. They are trading at an extremely expensive multiple. If you take out Tesla with its astronomical PE, they're still trading about 27, 28 times forward earnings for this year or the next 12 months. So that very narrow leadership is very expensive. Where you are seeing more value is in groups like consumer staples. And what's interesting in the events of the past, this week and the past several days, is you're seeing investors rotate into AI-resistant names, which might be consumer staples, it might be transportation stocks, it might be utilities or real estate-related stocks. So you're seeing that defensive rotation within the market right now. And considering those mega cap names are so expensive, that makes a lot of sense to me. And personally, I favor the consumer staples group right now.
All right, Mike O'Rourke is Chief Market Strategist at JonesTrading. Thanks for joining us. Appreciate it.